Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, March 14th. Happy Pi Day to everyone in the room. As we get started with just a day ahead of the FOMC, we have the BOE, the BOJ, the SNB is on tap. Not that I'll be necessarily trading any Swiss crosses personally, but if you have any questions on that. On the menu for today, guys, I got the DXY, obviously, the Aussie, dollar, yen, and sterling CAD from last night. I was just staring at a chart for like 30 minutes on Kiwi yen, which looks very interesting. I like the near-term short side, so we'll talk about that. It's making a weekly opening range break right now. Be tentative on it, but we'll go over Kiwi yen, which is an interesting level. From yesterday, we'll cover all the euro crosses again. Euro Aus, Euro Key, Euro Dollar, Euro CAD, which I highlighted on Daily FX yesterday. And then we'll take a quick look at the commodities, gold, silver, copper, and crude, all on the menu for today. As always, guys, feel free to throw out any questions or trade setups you'd like to review as we go through the session. Good morning to everyone. Ziad, Vladimir, Pooja, Marcel, Mark. Got the whole crew in today. Gary, good morning to you. Carlos, Graham. Great to see everyone here in the room. So let's jump right in. Just talking about the commentary here heading into the FOMC, looking at the Fed Fund futures and what we're looking at. Before we get started, here's what the relative performance of the greenback looks like heading into the U.S. trade session. You did see a spill in sterling in overnight trade. Not interested in participating on the short side of sterling, even on the near term, guys. We've still been looking at the same type of really tired price action, in my opinion. I still think there's a risk of a washout. If you're going to take short dollar or long dollar exposure, rather, the pound at this point, again, is still something I'm very cautious on. So while it is the weakest performer on the session, down 0.67%, if you're not already involved there, just use some caution. CAD down 0.33, Aussie and Euro down 0.18 a piece, and Kiwi and Swissy also slightly down. Dollar yen is doing its own thing, still holding the formation really well that we were talking about yesterday. That 50 line held as support. We didn't break. So we're still above that, and we'll go over the implications for dollar yen later in the session. Whoops. Okay, and also keep in mind, guys, we'll be online tomorrow for another webinar right ahead of the FOMC, so we'll get a nice little update on everything before we jump in. Here's what the dollar index looks like, and what I wanted to show you before I just lost that window is the Fed countdown. And aside from what actual Fed fund futures are showing, and again, here's what the actual Fed fund futures are showing. Obviously, for this rate hike, we're already priced in completely, but moving forward later in the year, the focus that we'll be looking at with the projections are what's the future glide path for interest rates. We'll review this again tomorrow briefly, but I just wanted to show you right now, obviously for tomorrow, we're looking at 95%. That's a null and kind of in the bag already. May, it's not. It's an offbeat month. So at 100%, we're still at 6. So basically no expectations for May. The next quarterly projection would be June. And that's when you start to see things mount, again, 54% or 55 at this point, percent chance that we'll see another 25 basis point hike. All you do is just add the subsequent probabilities that will for those other rates. So we're at 75 to 100 now. After this week, we'll be we'll be at 75 to 100 after this week. So 100 to 25 is 52%. 25 to 50 would be 3%. Add those together, and that's how you get the rate. The next quarterly projection for the meeting would be September. Okay, and again, that's still not quite as high. It looks like a hold in September. That's less than 50%. Jump into December, last one for this year, and you start to see that again be above 50%. So what the markets are actually pricing in at the moment is a hike in March, a hike in June, a hold in September, and another hike in December. That's 3 hikes. And that's what you want to focus on tomorrow. Okay, if that shifts where the June, which is expected to be a hold right now, or excuse me, the September, which is expected to be a hold right now, If that only holds somewhere in the range of 30%, you know, you're not going to see the market really react as strongly. If we start to price in that September hike, now we're looking at 4 hikes this year, that's when the market will need to readjust. And that's what the focus is tomorrow, period, end of conversation, okay? No one cares about 25 basis point. That's priced in, moving ahead. Please, Nat Gas and the SPX, very important, Vlad. Let me add that to the list. I don't have any near-term setups on those, I'll tell you right off the bat, but we can definitely take a look. You're in the right place, Nat Gas and the S&P. Okay, any questions on the Fed? Again, we'll go over a quick review tomorrow of the actual Fed policy and the dot plot. We'll do that tomorrow so it's fresh in your head right before the release. Heading into yesterday's update, and before we do the dollar index. So the dollar index probing resistance as we speak right now. Remember, last week's washout, we talked about this yesterday, and break below support up against that key resistance level again, right at the 102 handle, just above is where we probed, and we had that median line, which also has been a decent pivot in price here coming off the December highs, and the pullback, right? So from here, I'm looking for exhaustion right now. Broader bearish invalidation heading into the FOMC remains this key region here, okay? The high day close for the month comes in just higher at 102.14. Keep that in mind. Give yourself some breathing room. But that's near-term bullish invalidation, or bearish, excuse me, invalidation. So if you do see a pop through that, expect the next leg higher. Not my favorite scenario. More so, I'd be looking for exhaustion on a stretch rally into this region. That said, here's what the near-term picture looks like. If this structure is in play, and like I said early in the week, it's a little too early to get too heavily reliant on it, but it does highlight some very interesting price action. This is a 120-minute chart of the dollar index. Basic pitchfork off the lows that we've been working with. 618 caught that high perfectly. Little messy on the median line, but here's the break of the lower parallel, which is basic trendline support, and we're testing the underbelly as resistance. Within the confines of the decline, if we're working with this pitchfork, okay, well, the upper median line parallel of that converges here as well. Add to that you have that high from back here in February, back on the 15th, that gives you 101.76 as a stretch. If that wasn't enough conviction of this being a near-term key resistance zone, tack on a quick retracement off the highs. You'll see that the 50% is catching the high right now, and the 618 inlays exactly with that 101.76, 101.78 target. So either way you look at it, I'm looking for exhaustion into the U.S. trade session into this region. If this is a break that, you know, is going to be legit, we can work with. Listen, I do want to just say, you know, we're heading obviously into the FOMC, so things are going to get lateral, things are going to get kind of choppy. You're probably going to see volume start to kind of dwindle down as we get into Asia tonight. You got the BOJ on tap as well, so just keep that in mind. Leverage side should be smaller, and as you head into the actual interest rate decision, obviously you want to keep some of that powder dry. Okay, but sub 101.78, 76 by my estimation near term is something you want to respect here as resistance in the dollar index. Questions on the Dixie? Okay, even if you take a deeper look at this at a 30-minute chart, you know, just noticing this morning, not really divergence per se, but you're certainly seeing this flatten out. Obviously, as price sits here, the impetus comes on the U.S. Open. If the topside break of the Asia Open, of the Asia highs gives out, you know, look at that 101.78, 76 is a final ditch stretch. Beyond that, I'd be very cautious in trying to turn this. But you are at resistance. Okay, moving right along. Let's get through this. Aussie dollar. Here's what the Aussie looked like from last night. Aussie, Aussie, where art thou, Aussie? Here we go. For you, those of you on the swing side of things, we're still holding those shorts. No change on that front. For my intraday guys, you know, we just had another opportunity to try to take this lower. And yesterday was that opportunity. Here's what the Aussie looked like on the daily chart. Again, we've been following this for the last couple of weeks. The advance kind of fizzling out ahead of trendline resistance. The real kind of sexy part of this trade was just the simplicity of the near-term picture. Basic channel resistance off the high, confluence with a 38.2. We were looking at this exact level last week. Here's what Aussie dollar looked like last week as we were bottoming out support, and we even noted, look, we could see some upside potential from here, and if we do, that's an area of resistance of which we would start to look for possible re-entry on the short side. So for Aussie, that's basically what she wrote. You got that topside pop right off that support level, came right into that basic 38.2 target, 75.86, excuse me, that's where we capped out. And again, last night, we were right at that region saying, look, we're at resistance. Look for the pullback, initial support 75.42, backed by 75.30. So we're there now. What now, Mike? Well, the one thing I want to highlight is that this is the exact, the target that we outlined at 75.43 is not only that low, it's actually the exact weekly open. So the weekly open offered some support, and you're what? 15, 20 pips off the weekly open now. Watch this range right here heading into the U.S. trade session. Risk remains that you kind of go for another run into the basic trendline resistance, then break down. But the broader picture, again, respecting the short side slope below 75.86. And really, I'm still comfortable leaving the near-term bearish invalidation level at 76.16 here. As long as we hold below those swing lows, a basic 50% retracement, even if we spike, kind of still like the short side. Jamie, on the swing side of things, we still have a constant, our stop on that trade still is 76.35. We haven't changed that. Any questions on Aussie? You're still clear for data on Aussie until later in the week. We do have Aussie employment data shortly after the Fed. So on Thursday, or no, we're on right after Fed that same night, we are looking for Aussie employment data. 5.7% is the expected unemployment rate, change of 16,000 to the upside. Hasn't been necessarily a big player for the Aussie as of late, but as always, we've continued to see that meltdown of full-time employment as part-time gains. And that's the one caveat, that even if we continue to get these 16, 18, 20,000 monthly prints in Aussie, the full-time employment picture just continues to shrink. It's all part-time jobs. It's not a good thing for the structural labor force. So keep that in mind for Aussie dollar. Based on how the dollar reacts later that night, not only do you have the BOJ, but you also have that Aussie data. Ultimately, a dip into 74.35, 74.50 is what I'm looking for here on Oz. Okay, questions on Aussie dollar before we move off? Pretty tepid price action near term here. See if we can't get another pop higher, so we can probably get another attempt at another entry to get another short. I'm out of this. The limit was just above. Just wanted to play it safe, a weekly open here. So we'll see if we can't get another entry, but broadly speaking, still liking the short side here in Aussie. Next up on tap is dollar yen. The abomination in person makes rears its face again on the intraday trades just because of the cleanliness and the tidiness of this chart. It's just the simplicity of this median line formation that we added last week, which I was kind of skeptical at first. All we had was these two touches to really judge it. Continued to play out. The pullback 50 line catching support, little spill there, but the median line, nice resistance, 50 line back at support. The 50 line now converges on the weekly open today in U.S. trade right now, right here. Okay, let's call it 114.70, 114.72. A downside break below that, okay, you're risking for a drop towards the lower parallels. The 50% of the advance converges on that right near 113.60. Do I necessarily think we'll get all the way down there? Sure. If we get a spill in the dollar or a strong reaction in FOMC into tomorrow, I don't see why not. But broader picture is this is the level that would turn things, in my opinion, south for dollar yen on a more aggressive stance. If we take a look back at the daily chart, it would also necessitate a break of this broader parallel that we've been looking at from the lows from last year. Also, Just lower is a nice confluence region, of which, again, that sort of would be a snap, in my opinion, magnet for another 100 pip drop, which is why this is my near-term bullish inval at 113.60. If we break below this, it would not only be a break of that swing low from last week, the 50% retrace, and all those slopes, but you'd expect at that point a quick run into the the monthly open, which converges on the 100-day moving average, right down here at 1270. So I don't want to be a member, trying to be long in this region if this gives out for a drop into the monthly open. And of course, obviously, downside targets beyond there, this thing could fall apart. So key focal range for dollar yen still remains this key region here, just below resistance, 115.52, 116, still that zone, that major critical zone for dollar yen. And as I said in yesterday's update, if we spike into 116.08 on like an emotional FOMC, no material change in policy outlook, but the dollar just kind of runs, 116, in my opinion, would still be an opportunity to fade some strength here in dollar yen, which would mean, short entries up there at the top. Northbound of 116, forget about it. But as we've continued to note this 15, 50, 16 zone for months now as the key pivot and major resistance. And the touch you got last week, right to the bottom end of that zone. I can't rule out another probe of it, but certainly still continues to highlight the critical nature from a technical standpoint of that zone. Questions? Hi, Mike. I'm guessing that many are waiting for 113.50 to get long again. If everyone is looking at that, is it possible that commercial traders will just take the abomination higher way before 113.50? Yeah, 100%, which is why I completely agree with what you're saying. It would be too much of a clean move, in my opinion, for it just to drop into 13.50 and rebound. I'd be looking at these lower parallels, and again, you're never going to catch the exact low, Gary. So from if you're trading dollar yen, you're not probably someone who's tit for tat really eyeing every single pip for that exact entry, right? It's dollar yen. It's going to do its own thing. So I would be looking on exhaustion on any type of kind of fall apart into that region. The problem is that, yes, sub 1350, I think this thing could wash out real quick right back into the monthly open. And in my personal trading, I won't be sitting in a trade 100 pips down. It's just, you don't find that happen very often. So how do you play it, right? You either wait for that drop and you have to just respect the technicals and kind of, trust your levels, or you need to wait for the breakout and the pullback. You can't just kind of gun it from here and feel it. I mean, I guess you could, but I can't advocate that kind of behavior, like getting long right here, putting a stop at 1360, the 100 pips, 120 pips to the downside. I mean, sure, if you're a longer term, medium term guy, smaller leverage, you just got to be in it sometimes to actually make the trade. But from my standpoint, a guy who's a little bit more active on the intraday levels, on the more of a weekly prospect, I have to wait for my levels to give out. Look, at the end of the day, Gary, it's Tuesday. We're just setting the weekly opening range. The weekly opening range is taking shape right below resistance. I think you wait for that break. You got major event risk on tap, 2 central bank rate decisions on both ends of the trade, the dollar and the yen, within 24 hours. You'll get the volatility we're looking for, Gary. And I think you'll get the definitive break as well. But patience pays, especially like on a trade like this. Now, that's not to say that there are not other yen crosses I would play with. I think dollar yen is a little bit one of the riskier ones because of the dollar event risk, generally speaking. But certainly euro yen is a very interesting prospect that we've been looking at. Jamie had a piece on that yesterday. As I said, Kiwi yen, I'll talk to you about that. That's like just shocked me this morning. I don't know, it looks kind of really sexy to me at this point. But we'll take a look at that. But for dollar yen, Gary, this is kind of the focus for me. Yeah, Vlad, we'll take a look at euro yen. Let me write that down. I still like Kiwi yen actually better, but we'll take a look at euro yen. Any questions here on dollar yen before I move off? Gary, does that make sense? Cheers, man. He says, cool, many thanks. You're more than welcome. So yeah, look for the dribble lower to try to get long. If we top the upside again, be weary of 115 and 116.08. Those are key levels. Just for your information, the 116.08 level is actually the 2015 low. So if you go back the August low from 2015, this swing low, which was a perfect pivot we launched off of in January before breaking down, is just going to be an area of interest here. Okay, and obviously 1550 is the 618 of the broader decline off of that high from 2015. So both just a big critical region going all the way back even to 2014 on the ascent. Once we broke through that same support zone, offered support here back in December, again in January of 2014, charging that launch. So you can see a scenario where if we do break through that, sayonara, you're going to probably see dollar yen just go straight through 18. Till that happens, you got to respect resistance. Inevitably, this is a broader upside trade, guys. No one's arguing that. It's just the risk of it still remains below resistance here. Okay, moving right along. Sterling CAD from yesterday. Where are our charts? Okay, so dollar yen, again, no change to any of those levels. Same median line here that we're sitting on right now. Also converges on the weekly open. Watch that as near-term support. Moving right along, here's what Sterling CAD looked like yesterday. And something I just wanted to bring to your attention, it was an opportunity on the short side already just because we were on the upper bounds of the consolidation range. So we're at this point, we have pulled up quite considerably off this level. The daily chart is awesome on this. Here's what the daily chart looks like for pound CAD. Really clean consolidation. Bring your attention again to the broader scope here. So this is basic. Trendline resistance off the highs from last year. Pivots, really nice. Pivot, 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 support, 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 support. Okay, extending off the lows back from here. Also caught these lows. So you got that break, right? Real ugly break. You want to see this kind of rocket once it breaks a multi-year formation like that. Nonetheless, it hasn't dribbled back below former resistance. And guess what? That former resistance line now converges on the lower median line parallel of the upslope, highlighting this region here. Guess what? That region there at 62 is also the opening range low for last month and continues to be the range lows that we've been in. So really clean as far as kind of where your major key support level is and what would invalidate or shift the focus, let's say, back to the downside for pound CAD. Okay, really clear. On the upside, well, you have the 100-day moving average, which converges on basic trendline support of the consolidation range we've been in. And all that is taking shape below this critical region, 165.90 into 165.13. Look, no, it's a big range. 165.24, excuse me. I know it's a big range. This is Sterling CAD. It has a massive ATR, so you have to work with the bigger ranges of resistance and support. What sits up here? This is your yearly high close. Okay, all the close highs for the year came within this range. It is a 618 retracement of the entire decline from the highs that you made back in November. And it is the 2017, okay, low day close. No, the 2016 low day close. Sorry about that, little title. Okay, from last year. So your low day close that you made back on October 10th comes right into that region. So major critical resistance. And if we clear it, it's the opening range high for last month. It's the opening range high for this month. If we clear it, that's your go-ahead signal of a major breakout play here in Sterling CAD to the upside. I'm not calling that break right now. These consolidations can typically go all the way till 10% of the apex from a technical standpoint. So you could still see another couple of days where we're still within this range. I just wanted to highlight it because when it happens, it's going to be something like this. The market's been coiled for way too long. It's not going to be a dribble out like we did out of this trend line right here, okay, where we kind of broke out. We just sat there. If this gives out and when this gives out, it's going to go. With the same respect, a downside break below last month's low That's your signal, again, of a possible fall apart scenario in sterling CAD. And such a scenario, I don't really have anything on tap. I mean, you could bring up a basic retracement is what you'd want to look at. But if you do that, you'd be looking at 160.70 as a target, and then right back into the lows, 159s. So on either end of the spectrum, you know what to do. But watch this critical range from the near term. Okay, for the guys who are trading with me on a day-to-day basis, there's opportunity within this range. Buy at support, sell at resistance. This is what it looks like on the 120-minute and the consolidation that we've been in. Again, there's that trend line. Just continue to bobble right into it. Okay, basic trend line support converges on a 38.2. It's the same retracement that we just added there on the intraday chart, on the daily chart. And get you the 240-minute a little bit cleaner. You know, just continue to play that range. Look for the breakout over the next couple of days. Okay, not for the faint of heart. If you're newer to sort of short-term analysis, guys, again, it's a big ATR. Might be worth a play. It's a pound pip. It's a pound contract hold. So again, keep in mind the margin requirements on it. But a good candidate, in my opinion, to look for a more prominent breakout play over the next couple of days. Any questions on sterling CAD? I know it's not a pair that is super popular, but when the technical clarity is there, I promise to bring it to you. So again, no change to any of those levels from yesterday. We were at resistance. Again, this is the weekly open, 64.64. Came right off that. Support, I still have near the 63 handle. The low we just made was right around 63.05. So whatever, it's, you know, it's a sterling trade. It's going to turn ahead of support. Sometimes it'll probe through resistance. Give yourself some cushion on this. But look for a breakout over the next couple of days. 4. Okay, that was number 4, sterling CAD. Let me take a quick segue. I want to jump into just that Kiwi yen trade I was looking at because I'm actually just really interested to see what this thing is doing. Okay, it's still just dribbling. All right, look. So here's what Kiwi yen looks like on the daily chart. This is a random ML that we added. I don't know who was asking about this last month. I think here was the last peg of when we actually looked at this trade into the start of March. And obviously the break below 80, 30, 80, 30, 80, 40 region was pretty big. That's your December swing low here. It's also the range lows that you made for last month. A basic 236 retracement, the entire advance off of, well, this is actually the 2016 range. All that shifted the focus to the downside. Gap lower took out that 100% extension. The rebound here turning ahead of the 100 and this 50 line. So what does that mean for Kiwi yen moving forward? Well, the daily chart doesn't really speak of it as much as the intraday. Here's what it looks like. And basically what I'm looking at is this. The weekly opening range high, okay, now converges on that 50 line, 79.68. Again, look for a sort of a push through the opening range lows. There's really nothing on tap until a move back into the lows here at 78.85, 78.90 as an initial target. Nice confluence region comes in down here at the 38.2. The lower, with the actual median line of that decline at 78.20. So it's a nice tight range. If it goes northbound of 79.70, kind of just sit it out, see where we find resistance. But on this move, I do like a dribble lower, initially looking for a tag of the lows here, and then a little bit of a deeper draw north towards that 78.20 level. Nice 38.2 retrace. Again, BOJ on tap. As far as Kiwi's concerned, I'm pretty sure we're clear. GDP figures. Yeah, we do have GDP figures on tap tomorrow night. Okay, here are those. Expected to see a pullback there, even in GDP. Could help us fuel the downside, you know. 1.1 clip expected quarter for the fourth quarter come down to 0.7. Year on year expected drop from 3.5 to 3.2. You know, that's not going to be the clip that you would need to get Kiwi weakness. Markets are already expecting a weak print. So you would kind of look for something of south of 3.2% on a year to trigger some additional Kiwi weakness. Okay, any questions on Kiwi Yen? I just think it's a really interesting trade, the way the weekly range is setting up super tight. Weekly opening range high, again, converges on that median line. Look for that downside move. All right, that's number 5. Euro yen. Who is that for? Vlad. Here's what euro yen looks like. Since we're going on all the yen crosses, let's just finish up. I obviously haven't highlighted this yet, so let me just do a quick update on these levels. Dun, dun, dun. New high. Hmm. Oh, nice touch of a parallel there. Ooh, nice touch of a parallel there. 1, 2, touch. Puts us at near-term support right now. Okay, take a move there. Okay, we could probably get rid of this for clarity's sake, just so we don't clog up the chart. Just to make this a little bit easier to see. And again, I don't want to get too granular, but an extension off this high might be fruitful. Okay, the 100's right down there. Okay, so Vlad, here's what I would say. It's probing the lows from yesterday, but you're sitting at slope support. I do think you could see probably another pop higher here, just on a rebound off that region. I mean, you've seen some really nice touches. Obviously, on a breakdown, you still have to contend with 121.85/87. So I don't know if you're holding shorts on this already. If you are, I wouldn't necessarily be shaken out, but I would prepare for a little bit of a rebound against me. This is ultimately what you need to get through, is that 121.85, 121.88 target. It's 100 off the high. This is also the 618 off the decline from the highs. So it's a nice pivot zone that we've already seen price react to. And in my mind, that would open up, a key target down here. Now, remember, our outlook for the euro isn't really for it to fall apart. We highlighted the euro dollar. We're going to go into the euro crosses in just a moment, earlier in the week as a short trade, and we've been bearish since the start of the week, but ultimately we're looking for that euro to bottom out and give us more of a support bounce. This is a yen cross. So if yen just surges, that would be the opportunity, in my humble opinion, on a drop into this zone to possibly look for reentry on the long side. You even have some downslope support, which converges there as well. And a nice fib relationship would certainly do this thing, I think, nicely. Let's see where that 1618 comes in. Okay, 121.40, depending on where we are in time. It's going into Fed. It's going exactly into Fed, actually. It would be over here. But that's sort of the idea. Look for the melt lower, possible surge on BOE, Fed rather, and then possible fade opportunity in Euro Yen. But I am looking for a move higher. By the way, as far as the swing side of things is concerned, I was talking to Jamie about this yesterday. He's looking at the same exact thing. He's looking for a move into 121.35. Actually, that's what our target is. Right above this region is where our target is on the swing side of things if we get a reset to get back in. So I'm right in line with what he's thinking here as far as Euro Yen is concerned on the near term. And This is just popping out at me. Give me 1 sec, guys. I want to see what this looks like. Yeah, that even pushes out even more. But resistance would give us right at the weekly open again, kind of where we capped out last night. All right. Vlad, does that help on Euro Yen? Here's the daily chart looks like. He says, yes, thanks. Hey, you're more than welcome. Here's the daily chart looks like if you want to take a snapshot of that. There was an update on the intraday charts not too long ago on Euro Yen. It's there, but here's a quick update. I mean, both of those targets got taken out. Obviously, the break last week took us right into basic trendline resistance off the December highs, and that's basically what you're reacting to. Again, near term, we're playing the pullback as we highlighted resistance, broader trade, still treating this as a breakout. All right, that is Euro Yen number 6. Okay, let's take a nice segue, actually. It's a perfect. So let's go into the Euro crosses from yesterday's update. There's not really much color to add. They've been playing out pretty well. You don't want to necessarily change into the biases just yet, but we are starting to move through those targets pretty rapidly. So I want to soften definitely the downside tone to all of these trades as it were right now. You know, here's what euro dollar looked like earlier in the week. We started off saying, you know, watch that key resistance level as we opened on Sunday. We probed into 107, and we've since come off down sub 106.20 at this point. Euro trading at 106.31 at the moment. But here's what the intraday chart looked like, and here's what euro looks like right now. We probed right into that region. There's the pullback. Again, we didn't quite clip 106.20 yet. The low so far for the session, 106.24. So I'm looking for this thing to possibly fizzle out near term. Still, risk remains for a move lower ultimately, but we are looking to buy that. So near term, here's what the intraday chart looks like. So at the moment, I don't necessarily have us at support or at resistance. I think you could melt a little lower. I do think that a drop into the monthly open or this region would be, I don't want to say a blind buy. I think that's a little too too aggressive of a bias for me to kind of relay, but I do think it's a great opportunity if you get a drop below there. Don't necessarily think we'll get all the way down there. But the euro still remains a constructive trade. I mean, slope remains constructive. You've broken above long-term downslope median line resistance, which should now offer some support. So any spikes into this region, excuse me, on dollar strength, on FOMC, I think would be, again, you know, barring them really shifting interest rate expectations to the point of 4 this year, barring that development, I do think if the dollar rallies, all of a sudden she starts talking commentary that's a little more hawkish, but markets don't really price it in. I think if the dollar surges, you want to fade that. So we'll see if it prompts another low here in euro dollar. I wouldn't necessarily change any of the levels, guys. The only thing I was looking at earlier is just a basic retracement now that we've made that near-term peak. Kind of gives you another possible target or support right at the 106.05 level, kind of like right here. I guess I'll leave it on there for you. Oops. Actually, that 618 comes in right at the monthly open too. So we'll leave that there. But those are sort of your near-term levels I would focus on for the euro right now. All right, so a quick update from what it looked like earlier in the week. Came right into that target. We've taken out that. We've taken out that. Look for support here in the monthly open. Bullish in validation. Still going to hold that 105.25 heading into FOMC. We got to leave it below that low from last week. You got fibrillation there, slope support there, and those lows. Got to respect it. Questions on Eurodollar before we move off? Again, no changes to any of those targets. Moving right through the euro crosses, euro Oz looked like this. Another trade that opened up the week right at resistance. That resistance was 41.73. We noted that even on the near-term charts, you had some very clean slope support. Just a parallel off support, taking off the highs that you made back here in late February. Literally caught that high, converged on the 50% retracement, resistance. Here's what euro Oz looks like now. It held like a charm into the open of the week. You've pulled back into initial support, and now you're kind of holding this range. A basic retracement I added on just because now we know that that's a near-term concerted high does leave more room to the downside before all is said and done. So I do think Euro Oz has further downside to go. 140.15, 139.70 areas of interest for possible reentry on the long side. Bullish invalidation still at 139. No change to any of those levels either for Euro Oz. Okay, so we're at we're sitting right here again, 140.15. This region, area of interest for possible entry on the long side. There's two slopes in here. I know it's kind of messes with your eyes a little bit, but I wanted to see how we would react here. The median line obviously was very fruitful. Support, resistance, resistance, support, support. So I kind of just wanted to leave that on there. Really, it's these, I guess. Should probably make them solid at this point that I want you to focus on for the time being. And that still highlights a basic 50% retracement, former swing highs, and the lower parallel or basic channel support down here, 139.05. So as long as we hold above that, you're looking for a correction to buy. So immediately lower, look for that low to give us a little bit more of an entry to try to play a rebound here in Euro Oz. That is number 8. Any questions on Euro Oz? Next up on tap, Euro Key. Here's what Euro Key looks like. There it is. Another one I don't want to spend too much time on because we highlighted this one earlier in the week, and there's really not been much play on it. Here's what Euro Key looked like on Sunday morning, or on the Sunday open. The June low is really governing the high, and that was 154.52, and that's still continued to be the exact high and the opening range for the week. So look, until, oh my goodness, yesterday even too, this thing still has not given us a down day this month. Markets can only hold up for so much. That's not a reason to be bearish, but it's also at technical resistance, right? The June lows. Basic swing lows from here. You have also the 50 line of the ascending median line formation that we added off the lows, and nice confluence region. Every single day this month has been an up day looking for the exhaustion pullback. The trade remains constructive, okay, while above this region here. You have the 200-day moving average, the yearly opening range high, and former slope resistance, now support. Median line off the lows, all converge right here. Very simple game plan. Okay, if we get the pullback, look for support. The long side is at risk, sub 54.50. Here's what the intraday chart looks like. Okay, even a near-term slope off the lows does highlight the upper parallel there. Obviously, you got a little bit of a break, but 54.52 was well within our sights. And again, that 50 line just above. So all I wanted to highlight on this, obviously there's no change to any of the levels that we've been following from early in the week where we opened up. But all I wanted to highlight is that the weekly opening range is just pretty clear-cut and simple here. So that gives you a very easy way to play this. Look for a break of this near-term range. Obviously, the 50 line would be initial support at 53, but even that's, a 70 pip drop. This is, again, Euro Key, bigger ATR to work with. So keep these levels in mind. There's going to be some volatility, obviously, in the Kiwi and Euro crosses, typically speaking, on this. So I do think that 54.52, 53 break is what you want to look for on a near-term breakout type of trade for Euro Key. Ultimately, any pullback near the median line you want to buy. I'm not looking for any type of major reversal or key reversal here in Kiwi. The point being is that Kiwi has been sitting at support. And euro, I think, wouldn't be outside the realm possibility to make that new low, right? It's still dribbling lower. So if Kiwi rallies, you see a little bit of a euro pullback, that'll give us the pullback we want. But broadly speaking, the broader trade, guys, is not something you want to try to fade. Okay, this is, again, not one down day yet this month. And we'll get one, but for sure, it's not something you want to get an aggressive stance on. Just trying to hold a balloon underwater with this one. Okay, and that is Euro key. Number 9. A quick segue into the commodity block. Gary, was it Gary who wanted to look at, Vlad wanted to look at nat gas and the SPX. So I haven't looked at nat gas in a while. Let me take a look at what that looks like for you. Okay, we cleared 290, huh? Oops. Okay. Everywhere you confluence. Look at that. All right. So we took down both of these targets. We dribbled below it, pivoted back above. That changes things back to a constructive view, but the advance is now testing a fib ratio that I always will respect. This is 618 extension off of the decline from the highs and also a 38.2 retracement of that same decline. Just above it, you have the 100-day moving average. Risk for a near-term pullback on this one, I would say, Vlad. Ultimately, you want to look for support near down 280 again, 278, this region here. Let me see what the near-term chart looks like. But I would respect this near-term as resistance, even up into that 3 handle where that 100-day moving average is. It's been a decent pivot in price here for nat gas. Respect this near-term resistance. Let's see what the near-term chart looks like. I wouldn't necessarily stress 309 at this point. Near-term chart. Okay, hasn't been too long since we checked this out. So it looks like the last target that we had was up here at 304. We just missed that. The high was 303 and change. On the turn, topside break. This is the risk on the rally. And your weekly opening range low. Oops. Comes in here. So here's sort of the game plan of how I would envision this playing out. And again, I'm just going on the fly here, Vlad. I haven't really been following this trade, but I would just say this. I think it's set up a really nice weekly opening range just below a key fib of longer term status here off the 38.2 from the high. And if we break below 293, the risk for a sharper setback takes it down here into that 284. I know I was saying 270 earlier, but a near-term picture, excuse me, just highlights this a little bit clearer, I think, in reference in time of where we'll be heading tomorrow. Obviously, there's a strong dollar reaction, guys. Dollar-denominated assets are going to move too. So look for, that's why I wanted to go over gold and the other commodities, because you'll see if the dollar starts to rip, it should put those under some pressure. Also, as it pertains to gold specifically, if the interest rate outlook changes, that's going to be pretty big, as specifically because that's sitting at support. So a downside play might give you that run into 1180 that we were looking for in gold, where it would see, or I'm expecting, or me and Jamie are looking for a little bit more of a firm support bounce. Does that make sense, though? 294 estimated support, weekly range lows, that slope support for now. Again, I'd put this as a little bit more of a critical juncture in price as far as support's concerned on the nat gas breakout. Again, this key resistance zone on the daily chart really just continuing to highlight the critical nature of it. Let me just tack that on while I'm at it. There we go. He says, got it. He says, yes, got it. Thanks a lot. You're more than welcome, Vlad. Cheers on that. As far as the rest of the commodities go, here's what gold looks like real quick. I did throw an update. I know, I apologize, guys. The radar charts hadn't been updated in a minute. It's been a while, but they're usually broader charts from my standpoint, so they stay active for quite some time. I did do an update on the gold, Dixie, and Nikkei crude charts. So you can feel free to take a look at these rather. A little bit longer of a standpoint, so they're all daily charts, but really just highlighting the broader themes and the broader major key levels that you want to keep in mind. And I thought it was pertinent specifically heading into the FOMC. Look, gold is into near-term support. You've all seen this before. I'm going to bring it up, again, the weekly chart, highlighting this key region of support and highlighting just lower that 1180, 1176 region, 618 retracement of the entire advance off last year's low and those swing lows they made back in 2013. So support, both areas of interest for possible exposure, possible rebound here in gold. Looking at it on the near term makes it a little bit even clearer. Okay, there's the 618, 50% retracement, slope, boom, boom, boom. It's the same slope we've been following all year 2016. All these red lines are parallels of that same slope. This is the actual median line, and you're sitting at it right now. Also, the swing lows they made back here in May of last year. So a nice support zone, 1193, 1199. We talked about this all last week. That's the level to beat on the downside. Any short exposure you have in gold, guys, until this gives out, just be careful. I do like a new low, but I wouldn't be taking shorts into that region until we break sub 93. That scenario, you're looking for 1176, 1180, and that's an area of which I'd start to look again for possible support. Questions on gold. Initial resistance remains with that 100-day moving average, guys. It's been like clockwork. Support, resistance exactly on the opening range for the week. Okay, you'd need to clear this region here, or that slope, to mark resumption of the broader uptrend. Questions on gold. Definitely going to see a reaction today, not today, it's definitely going to see a reaction this week on the FOMC, so expect volatility. Again, I don't think there's really much to get super bullish about until we get down to that 1180 region. If we break resistance, look for a possible recovery as high as 1220. Look, if it breaks resistance, by the way, tack on a quick retracement. Let me show you the intraday chart. I don't really intraday trade this as much these days, but here's what it looks like. Okay, and if we just tack on a quick retracement, if that low holds and this thing rallies because the dollar sells off on the FOMC, nah, basic 38.2 is what I'd probably be the initial target, and that's still up here. Whoops, that's still up here. Not the cleanest formation, but nonetheless, Just a little color on the near-term chart. Just highlights the propensity. If this thing pops higher, clears the opening range highs, that 100-day moving average, 1220 and 1230 would both be on the menu, in my humble opinion, as like a stretch rally in gold. Obviously, we'll favor a move down into this region for possible entries on the long side. Silver looks like this. Also at support, structural support of the broader structure that we've been following in silver. Critical part, critical nature. We've been looking at this. I'm not sure who was asking yesterday in the webinar over on Daily FX, but guys, the opening range for the week, it panned out exactly like we said. That 1710 region actually offered really nice resistance yesterday, continues to highlight slope support and the consolidation into that 1710 region. Look for a break. Ultimately, 1740 is what you would need to get back resumption. If you break the lows, you're looking at least at 1655, 1670 as initial downside targets on a breakdown here in silver. So levels are super clean. You're in a very nice tight opening range, which has continued to consolidate into the lower parallel. Those are your best type of plays. When the opening range is consolidating into the upper parallel or the lower range consolidating into the lower parallel. Look for those coils to finally give out. And I think you'll get that as we get deeper into the week here and we get some dollar volatility. So silver also really poised heading into FOMC. All right, running right through these as we get close to the end of the session. Crude also on the menu. Obviously, it's going to be making some noise. People are going to be talking about it. Prices continue to sink lower, and we're still holding this near-term descending formation like no one's business. You saw a pivot right at the median line. Here's the lower parallel, catching the lows almost to the tick on this decline earlier in the week. So look, you're testing this region now. The 618 is just lower, 47.16. Don't get too cute with it. I do think that you're still at risk for a move lower, so do not get cute with it and try to fade this, in my humble opinion. You're in oversold territory on a daily basis. Remember, markets can continue to remain irrational way longer than you can stay liquid. So I think you continue to look lower here, 47.16. The lower parallel comes in just lower. If you're holding on to shorts here, I think you're all right. Sub 48.70, which is the resistance we highlighted earlier in the week, the 50% retracement, and the 200-day moving average. Now, it also represents the weekly opening range high. The only caveat I do want to say, and I always talk about this, guys, when I see them and it kind of pops out, obviously you're making an outside day reversal today. These, when they happen at the lows, can sometimes be exhaustion blow-off trades, right? This would be a perfect candle you'd want to see at the rally, at the highs of a rally, right? As we move into a high, an outside day reversal off key resistance to the downside is what you want to look for. I don't think there are too many examples here that we can show you except right here. That's an outside day reversal at the highs, or an outside day reversal at the lows to the upside. So on a move lower, outside day reversal to the upside would be bullish. This is a bearish outside day reversal at the lows. A lot of times this can turn to like exhaustion. So be weary of it. Long story short, you'd look for a little bit more of a conviction turn before trying to fade this by any means as it stands right now. Looking for targets at 47.16, and that lower parallel currently sits somewhere near 46.50, 46.55. All right. And that is crude. A quick picture of the copper chart. I just wanted to highlight because that formation that we added a couple of weeks ago continues to pan out pretty darn well, and so does the fib level. So if you need to take a picture of this for copper traders, feel free to take a snapshot. The opening range came right into that 50% retracement, guys. Those former swing lows and held like no one's business. You got the median line right there too. Look for a break of this. Key resistance and bearish invalidation still remains at that 269 level. Those former swing lows in that 38.2. So even if you get a pop higher, I think that might be a nice opportunity to look for a fade opportunity. That being said, respect that near-term range sub 264. The abomination hasn't moved for the last hour. In your opinion, is it likely that the rate hike is fully priced in, so maybe spike, then major fall after the release? Thinking 116.20, stop on a short. Gary, yeah, I think we covered it earlier in the session, right? As far as the dollar yen is concerned, I do think that a interest rate hike of 25 basis point is 100% priced in at this point. It's all in the commentary. It's all in the policy outlook. No one's going to care about the 25 basis point cut or hike rather, unless they don't do it, which is, you know, they're not going to want to upset a market that's 100% priced in. So short term, we expect bottomed or bounce in CL. So Vlad, to go back to the crude trade, no, I wouldn't necessarily say that you can make any type of assumption that a low is in place just yet, even on a near-term standpoint. It's in oversold territory in every single time frame. You know, I don't want to start fading that. Nah. You know, it could offer some divergence. Here's a 5-minute chart. It could offer some divergence heading into that 47.16. And from a scalping standpoint, if you get a triggered momentum, yeah, that might be a play. But even that counter trend, by all means, please. This is, you know, you don't want to try catching a falling knife. I do think it's going to make a low here near term, but I would rather it be off of more structural support necessarily than just kind of a drifter like this. Does that make sense, Gary? Or that was for Vlad. Do you have time to cover dollar CAD? Oh, guys, I didn't have it sorted in time that you guys were coming in. So if I missed any of your questions, I'm so sorry. I'm reading them out of order. Yeah, Mark, I got dollar CAD for you. We're over on time, but we'll stretch it a little bit. I forgot to go over this. You definitely have to have a picture of what's going on in dollar CAD. Look, 135.30 is still going to be the level of invalidation for a pullback play. Remember this? Forget the 88.6, but we've been talking about that convergence on basic slope support, former support, resistance, perfect resistance here. That converges on that 88.6, 35.26. It's also sort of the range highs that we made last week. So stretch that into 35.32, 35.26, 35.32. This region here. It did just make a break of the initial range highs, so yeah, look for a drifter here, possibly fizzle out. I wouldn't see this thing just ripping into the FOMC, guys. That's just my humble opinion. So even if you see a stretch towards that 35, 35.20 level, I'd be mindful of trying to stay constructive beyond that region at this point. But, you know, not too surprising, right? Crude prices selling off, CAD coming off. Yeah, sure, find this thing into resistance. Dollar or crude prices, as we just talked, it's got a little room before you can get support. So not really too surprising. Right, Mark? Yeah, you're more than welcome, sir. Yeah, I've been weary. I've been wanting to mess with dollar CAD, and if you guys remember last week, it was actually a really nice target there. And then you had the Friday, you know, crazy strong CAD employment numbers that just rocketed the loonie, i.e. dollar CAD lower. And I still think a new low is in play, or is in, what's the word, is called for. So yeah, I'm still, you know, looking for a move towards 34, but near term, 35.30, 35.26 is what I'll respect as near term resistance. All right, I will wrap it up there. Guys, thanks for everyone who attend. Again, we'll be back on board tomorrow morning at 8:30 Eastern. Expect things to kind of quiet down, okay? If things don't get overly excited tonight, you know, it's not, you know, nothing should be expected. It's going to be a little bit quiet as market participants take a sidestep. And again, tomorrow we'll go over the policy projections from last quarter, what we'll be looking for. We'll review the dot plots, and as far as the projections on growth, inflation, and employment, what we should be looking for heading into Yellen. I will see you all bright and early on FOMC Wednesday. Till then, best of luck trading, guys. Cheers.